I think once you're an operator through so many cycles and have seen everything, the good, the bad, the worst, you kind of, I think, naturally evolve into like kind of a player coach type of role where, you can put some capital behind a founder, which is, that's probably the smallest part of our job, but really, work with them to realize their potential.
Welcome, everybody. I'm Mark Peter Davis, managing partner of Interplay. On this podcast, I interview innovators about their strategies, industries, and decisions. This week, I chat with Nihal Mehta, co-founder of Eniac Ventures. Eniac is a successful seed venture firm that has made dozens and dozens of investments, including unicorns like AirBnb and Boxed. Nihal knows his stuff. He's been a serial founder for a very long time and has now been an active investor for over a decade. In addition to Eniac, Nihal has also started a few different organizations focused on social equity, one of them being the 100K Pledge. The 100K Pledge is a website that holds people accountable when they make public pledges to help fight injustice. The site keeps tabs on what people actually do to help the cause. As Nihal says, it's the Fitbit for justice. I always love catching up with him because he's really on point and has great insights. We discuss Eniac Ventures, the startup scene in India, and much, much more. Enjoy. This episode is brought to you by Thunder. Thunder is a platform that is democratizing access to capital. The company believes fundraising should be about who you are and what you've built, not just about who you know. Founders can create a free account and add their company information, and then match with relevant investors. Investors can create free profiles and provide their investment criteria, ensuring that they only receive relevant deal flow. By utilizing a double opt-in matching protocol, Thunder avoids the spam, only connecting investors and entrepreneurs that should be introduced. Visit thunder.vc to create your free account while the company is in beta. Thanks for being here, man.
Great to be here, man. Thanks for having me.
Dude, awesome. So to start off, do you mind giving us a quick overview of your background?
Yeah. I started, I was born on a wintry day, and no, I won't go all the way back. But I was born in Iowa, which is a whole nother story. Basically a serial founder, turned venture capitalist. High level, started 5 startups. A bunch of those failed. Some of them succeeded, but have the scar tissue and muscle memory to prove it. And started angel investing and found 3 other really good friends from college that were pretty much doing the same thing. And we decided to form a firm together, which is Eniac Ventures. And we started about 12 years ago. And so we're on our 5th fund now. I still think of myself as I think we all do think of ourselves as entrepreneur and founder first, not investor first.
Yeah, I think even running a firm, it feels like an entrepreneurial endeavor. I know the product might be moving capital, but it's still all the same, a lot of the same considerations.
Absolutely.
So why did you switch from being an active founder to a VC? It's a common switch, but there's something in the DNA of that. What was the thinking?
You know what's weird? Actually, when people say VC, I still get it still triggers me. As a founder, VCs are, we were kind of programmed to think of them as like vulture capitalists, and that they would really, fuck up your business essentially and like fire you as CEO at some point, and steal all your equity. Many of which, by the way, are true. Not an idiot.
Right.
But I never wanted to be really growing up a VC. I think it was just a natural progression of my career. I think once you're an operator through so many cycles, and have seen everything, the good, the bad, the worst, you kind of, I think, naturally evolve into like kind of a player coach type of role where, you can put some capital behind a founder, which is, that's probably the smallest part of our job, but really, work with them to realize their potential. And I think that, that's what I kind of naturally evolved into. I think I was very lucky to find, again, three other folks that were at the same place in their lives and their careers with similar ambitions. Um, but I don't think we would have dreamed in a million years that we'd have at this point in time, you know, Fund Five with, obviously it's a function of the market, but with like this many unicorns and this stable of incredible founders and this type of brand, we just kind of fell into it.
So I think a lot of people will be listening to this before they come in to pitch you, right? Or they know they got a meeting with you. They're going to hit Google. This is going to show up. Can you give us an overview of the firm? How do you think about Eniac? What do you want people to know when they walk in the door?
Yeah, we are generalist seed investors. I think the one takeaway is we are pre-product market fit, and so we work really hard with the founders we back to get the companies through product market fit, and then raise the Series A. Then we're usually coming off the board at the A. So we're laser focused on that, seed to A stage, right? And we've done this so many times, right? We have over 150 reps within ENIAC. And of course, outside of that, our angel and our own companies. But we have so many reps that we think we've become experts at it. And so I think the results speak for themselves in terms of very high conversion rate from seed to A. Now also a strong signal for the kind of the A community and everything else that comes along with it. But that product market fit stage is, it's getting through it is ugly. It's nasty. It's every founder knows you throw a million things at the wall and nothing sticks. You do it again, nothing sticks. Do it again, one sticks. Then you pivot, do it again, nothing sticks. Rinse, repeat. But we love it. That's where we have fun. So a lot of it is product distribution, recruiting, PR, helping business development, sales, doing a ton of sales, straight customer sales, lead gen for sales, and then raising the next round. So it's kind of like most of our founders call us, they're a co-founder, without the title and the equity. So that, that's ENIAC. We're not really focused on specific sectors. We started really focused on the mobile software space 10 years ago because that's where we built our companies. But I think now, we're generalists. So we love consumer, we love enterprise, we love dev tools, we love frontier tech. I just sent a term sheet for kind of a disruptor to TJ Maxx, like literally like an apparel commerce company for Gen Z. So that's not,
didn't see that coming, right?
Didn't see that coming. But, we happen to know this founder for over a decade, and we know that this is his life's work, and we had to get smart in the space, but we're backing founders that are, really aligned with their purpose. And, that can be in any category. And they believe they're changing the world in that particular niche. And if we're convinced of that, then let's go.
So are you, is that your main thing you guys are focusing on when you're making a decision? I mean, obviously everyone wants it all: market size, competitive positioning. Is it really a team bet for you guys?
Yeah, I'd say it's 90% team. Because the market and the product are functions of the team. A good team will go after a big market. So it's really all about the team. And so now I think we have the luxury to back a lot more repeat founders in and out of our portfolio. So repeat ENIAC founders, we can do all day long because we've already developed a working history with them. And we know their strengths and weaknesses. We also love repeat founders outside of Eniac that we've been tracking, for a while, and especially repeat founders that maybe have failed before. Ideally have failed before or tasted a small amount of success before. So they have a chip on their shoulder. They're highly motivated. They can see around corners. They're not making the same mistakes. But yeah, it's all about the team. And by the way, don't get me wrong. A ton of companies we back are first time founders as well. That have proven to us that this is their purpose, on the planet, and we're convinced that when you shoot for the stars and fail, you still can land on the moon, but that their trajectory is such that they're really shooting for the stars.
You went through before a lot of the ways in which you help founders, and I think that speaks to your experience. With all the volume of companies that you guys are backing, how do you do that? How do you operationalize kind of the support that founders need?
Yeah, it's a good question. There's a few different things that we do. I think, if you kind of unpack some of the things I threw out there,
Mm-hmm.
PR is one of the things I threw out there. We recently brought on this year as our VP of content, a gentleman by the name of Anthony Ha, who was at TechCrunch for 12 years, actually. And so he is consulting with our portfolio on PR strategy, right? We're even like producing videos with founders with special announcements and introducing them to reporters who will break the news and so on and so forth. So I think that, those are some of the ways. I think one of our secret weapons is also our network. We're actually going to be relaunching it later this year. And what that is essentially a little bit under 500 pretty senior level folks at very large brands. Think of this as Fortune 5,000 companies, and also, a lot of the new guard in tech as well, right? So somebody senior at Coinbase, somebody senior at Plaid, somebody senior at Dapper Labs, somebody senior at Twilio, what have you, to really help accelerate the biz dev and sales trajectories and corp dev trajectories of our portfolio. And that's kind of institutionalized. So like when we interact with a portfolio company, one is they can see kind of the network and access them, but we're constantly making connections, and creating liquidity. I think a KPI for us is like number of intros kind of per day, in and out of portfolio. And it's now in the, well into the double digits per day. But I think just that connectivity amongst the network is, I think, one of our secret sauces. I remember as a founder, that was the one thing I wanted from my investor is, fine, give me some feedback, fine, some moral support, fine, but like, show me the money. Like, obviously wrote me a check, but like, give me some customers, like make me an introduction to a buyer and actually help me close the deal. Because, that's going to help me get through product market fit, and that's really going to help me grow my business. And so, so anyway, those are two examples from the PR perspective and the, biz dev sales perspective.
We had a reporter on recently onto the podcast who gave us some coaching on PR. So it's funny you mentioned that. Your new hire who comes from the industry, any big insights or takeaways that you think would help founders? Something that he's taught you or you knew before that's like a hot tip for PR?
Yeah. Well, one is like, especially these days with like all the crazy funding announcements, don't just assume that like your seed round will get announced, because it probably won't, you're going to need some hook. We recently tried to pitch a seed round and most of the reporters turned it down. And actually one reporter said, we offered it up. We said, listen, would it be interesting to see a little bit of the sausage making, like how we raised the round? And she was like, yeah, that's super interesting. Like, would you be willing to even share your pitch deck? And so like that was the hook for this seed announcement, right? That will be coming out sometime this fall, which is, yes, this company raised some money. Here's how they did it. And
Right.
so I think especially now with this type of velocity in the market, don't expect that your announcements will garner any type of response from the press. The other thing is do not fucking do a web wire. Do not do this like the standard PR media wire that costs $50 and you do a press release and you send it out. And then you think that all the reporters are going to read it and wow, give you a call and want to write about it. One, that doesn't happen. Two, it actually bites you in the ass because once it's out there and is public and is searchable on Google, actually no reporter will want to write about it, right? Because they're like, oh, the news is already out there, right? So like
Right.
that web wire, it's crazy. Entrepreneurs still do that because it's cheap and maybe their PR agency's like, let's do it. Maybe because their PR agency is too lazy to like actually like introduce them to a reporter uh, and offer them an exclusive. But anyway, those are a couple kind of PR tips that are still very relevant, today.
Yeah, that's helpful. I've always thought your firm has done a pretty good job with the PR stuff, which is not easy. So glad you're able to share
Thanks.
some wisdom
Thanks.
on
Well,
that.
two of the four partners, myself included, were former like nightclub promoters, So like
Huh.
we we used to hawk kind of paper flyers on the streets to get people to parties. So I think we have a little bit of that DNA.
Was that college or post college, or when were you guys doing that?
Yeah, college, post college, now.
Tell me it was like after Fun 4.
Yeah, no. No, we stopped probably promoting parties I don't know, 15 years ago, but like that's still part of our ethos,
Right.
college, after college for sure. Um, but it's marketing, right? And I think marketing I think there's so much, we call it the sizzle steak ratio. There's so much amazing stuff um, that founders are doing and the companies they're building, but it's not commensurate with um, what they're publishing to the world to like make the world aware of what they're doing, right? There's something asymmetric of the actual work and the building and like the media and the awareness of what they're building, because the founders that are building back to the sizzle steak ratio are like all steak, they're like double MIT or whatever, but they're like heads down, um, and they're building amazing great things, but they don't have uh, you know the sizzle quotient to like get it out to the world. And I think to be successful, you need a little bit of both. Definitely more steak than sizzle. You don't want more sizzle than steak, but I think you need both. To really do something interesting and make the world aware that you're doing something interesting.
Let me take a different direction here for a second. Look, I've known Vic on your team for a long time, and I know you guys are all buddies at Penn. There's a lot of founders out there that are working with their friends. What have you learned about that dynamic over time? How do you manage that? It's probably better and worse. What have you taken away from that?
Yeah, it's definitely something we've been working on professionally. So yeah, we've been friends for over 2 decades. You know, um, we have an incredible personal relationship. We're best men at each other's weddings and godfathers to each other's children. Um, and I think uh, when we started working professionally, we had to really, we actually got a coach to help us incrementally work better professionally and realize like as a firm, we wanted the parts of the firm to like, add up to obviously greater than some of the parts. And I think this coach really helped us in the beginning identify kind of each of our superpowers, um, so that we know which kind of partner and superpowers to lead with in certain situations, and also have that mutual respect for each other's superpowers. And we definitely have that now. but it definitely takes a lot of time and energy and effort. Um, I don't think we would have gotten to a really good working professional relationship without a coach, you know? And I think we're very lucky to have been friends before we started working together, because I think when a lot of people start working together and then try to become friends, it's definitely a different dynamic, right?
Yeah.
Because, um, obviously the professional is trumping the friendship versus the other way around. So when you're like hanging out with somebody as friends, you can't help to you know, uh, think about them in the context of work, and maybe something that they could be doing better, or something that, um, you know, you want to give them constructive feedback. It's hard for you to do that, versus like being in the solid friend zone and being able to be very candid and honest and open with somebody. So I think it's easier, TLDR, it's easier to go from friends first to co-founders than it is, from co-founders to friends.
I think this coaching bit you mentioned is a big deal, and maybe it's literally Billions has popularized it and made
Mm.
it put it out there. We have a coach on our team that a lot of different folks use at different times, and it's been invaluable. And Venwise is one of the companies we're involved with, is it constantly introducing founders to coaches, and that's become a thing. Like there's so many executives out there that are getting help now. I think it used to be taboo because it was too closely associated with therapy, which I don't think should be taboo at all. But it seems like people are grabbing onto it, and there's a lot of people who have talked for a long time about mental health of founders and relationships. I'm glad to see it's kind of professionalizing and people are kind of getting it integrated. Is it
Yeah.
something you encourage your founders to do? Do you ever go
Oh, for
into founding
sure.
teams early stage? And
For sure. Actually, one of our best companies ended up hiring a coach for everybody at the company, VP and higher. And it's made a dramatic difference in the performance of that company.
that makes
Because I
sense.
think especially first time founders, first time executives, um, they don't know what they don't know. And so like having somebody that can really guide them and teach them and provide that feedback to them on a one-on-one level is incredibly powerful. And so, yeah, we encourage that. Uh, it's interesting as an investor, VC. Um, Again, every time I say VC, I cringe a little bit.
Yeah.
Uh, I say as a seed investor, especially, our number one job is kind of that of a therapist. I was talking about getting companies through product market fit, but it's also just being there to talk people off ledges, and you know if you look at my SMS, my wife's like, "Who's calling you at like 2 a.m?" I'm like, it's a founder. Don't worry about it.
Right.
Um,
Right. That's my
and
job.
Yeah,
Yeah.
but that's it. And by the way, it's 9 times out of 10, it's just being a listening board. It's not even really offering any feedback, or suggestions. It's just somebody to listen to. I think being a founder is an incredibly lonely job, where you are constantly stressed. You're insecure. You're being, crushed from all directions, you know, um, and you're the only one feeling those forces. Um,
Right.
and so I think, uh, anyway, yeah, a big believer in coaches and therapists and one-on-one, additional resources kind of outside of your, immediate circle.
Yeah, it's such a weird role as a founder because there's a filter for every conversation you have,
Mm-hmm.
except if you can get to a coach or somebody who you can over time become kind of give it unvarnished.
Yeah,
You're
or
spinning
like
stuff for your board.
founders talking to each other, you know.
Yeah.
Um, and so founders having that network, like CEOs talking, is really important. I think there's a lot of good
Yeah.
networks out there, that already exist, on that level. But yeah, founders should always have other founders. I know for ENIAC, we have like a founder Slack, and
Hmm.
it's pretty incredible what comes out of that. You know, Founders will just post some random stuff, and then they'll get like dozens of responses that they didn't expect.
That's powerful. So I've done a little digging on you before this conversation, and I've known about Eniac. Well, it's not that exciting. Don't worry, not going to burn you here. On your LinkedIn, you've also mentioned that you're involved in the India Internet Group. You might have given an overview on that. You've got a pretty prolific spread of activities.
Yeah,
it's going to be interesting to cover some of them.
Totally. So actually, when we started Eniac, interestingly enough, our one of our first investors, who actually anchored Eniac, was very interested. One of our first LPs was very interested in investing in India, and so we started in 2008. That's India Internet Fund, and actually the person that runs it is in India, in Delhi. Has been there since. And actually, Eniac 1 and India Internet Fund 1 were very similar in size and vintage. And interestingly enough, like Eniac now is, on its fifth fund, and we've had, back to 150 companies, and we've had 45 exits. And I mentioned, now double-digit unicorn. India Internet Fund still on Fund 1, and there's a few Series A's, maybe 1B, but nowhere, the same kind of momentum that's in the United States ecosystem. And obviously our ability to also have 4 partners at ENIAC and all very well networked and working hard at the US ecosystem. So this is something we started back then, and now we're just not involved. It's really my partner in India that's maintaining the companies. But we started it at the same time. Which it's just kind of an interesting analogy, like the difference in the markets.
It does feel like the Indian market is scaling, no? The outside read on it is it's getting increasingly hot. What's missing? Is it missing liquidity path, or what's the missing ingredient in their ecosystem?
Yeah, I think there's a lot of things. So yes, it is scaling now for sure. I think people read India as kind of in between China and the US, not in terms of geography, but in terms of regulations from the government and actual friction from the government. So while it is a democracy, the government is still controlling a lot of things that make it very hard for startups to break out, and I think that's one of the big reasons why we haven't had, so much success in within India tech. It's changing for sure. I think the other thing is the culture of American entrepreneurship is top of the world, is world class, where you can have, somebody that literally comes from nothing and become Elon Musk, and become, Jeff Bezos, and become, et cetera, et cetera. Sundar Pichai, the CEO of Google, these incredible, and we have so many in our portfolio, right? And I think that chip on the shoulder is so unique to the American ecosystem that is not afforded elsewhere. You don't hear like a Chinese immigrant story or an Indian immigrant story to India or to China. That kind of makes it big, right? So anyway, I think there's a number of reasons we could have, conversation for many hours on why, but I think those are the 2 big reasons. I think is the culture and government regs.
Yeah, the government reg this is the second time this week I've heard of it, and the story of the Chinese restriction narrative. We actually just had someone on the pod to talk about that in depth. It was very interesting. Is one that's been told in America. I feel like it's news to me that the Indian government and democracy is limiting. What are they doing over there that needs to be switched? Are there a couple of policies that are completely wacky? Like, what's happening?
Well, I mean, I'll give you some examples. A lot of people are not happy with the prime minister for a number of reasons. Besides him rallying with Trump, and besides him, by the way, uh, literally, maybe single-handedly spreading Delta, flaring Delta in last fall when, due to the elections, which by the way he lost, he had rallies without masks with millions of people. That was kind of like the big
Wow.
inflection point for Delta growing in India. Um, um, but besides all of that, I mean, a lot of the stuff, right? Like, I've recently read India has made it illegal for you to change religion after marriage. So literally, the religious tolerance, I think, is under Modi is is becoming, I think, a real issue. I don't think people are as free as as they want to be. Um, and so anyway, I think there's some good things about him. He's arguably a good businessman. But I think in terms of other things like optically, like Muslim sentiment, um, India basically took over Kashmir, um, and escalated that war, and by the way, killed you know and displaced thousands of people. So anyway, again, we could talk about this for hours, but I don't think that I think a lot of things that are going on in that country are. I mean, listen, we had Trump for 4 years, so um, thank goodness he did not get reelected here. But this can happen in any democracy, right? That's what a democracy is. Um, and I think India is just on you know the flip side of that, and hopefully that will change in the next election.
Fingers crossed. Now, this is kind of on topic, and I've always known you to be pretty much a significant social activist, right? When your VC hat's not on, doing things of significant merit and impact. I know your wife is also on that trajectory as well. What's the cause you're most passionate about? What gets you out of bed outside of doing your job and taking care of your family?
Yeah, I think high level it's just fighting for the underdog, you know. Um, and if there's social injustice anywhere, it means that the little guy's getting fucked. Little guy needs help, whoever that is, by the way. Um, and so I think it's more helping, leveraging our skills, whatever we can do. A lot of it is digital activism, um, whether that's writing or tweeting or organizing, um, fundraising, things that we can leverage our skills to move the needle on. Um, that's it. But fighting for the underdogs, I mean, uh, my wife is doing incredible work. I'm just like a tiny part of the shadow of activism in this household. But, she started this nonprofit, Girls Who Code, 10 years ago. And the underdog there were, girls that were essentially um, not getting the computer science skills that they needed, to compete in the 21st century. And so um, she saw the problem, and created a incredible nonprofit. And now close to 500,000 girls have computer science education, half of which, by the way, are at or below the poverty line. And so that's
That's awesome.
transformational to them, to their families, and to their neighborhoods from a socioeconomic perspective as well. And her next cause is now fighting for moms. She saw a lot of injustice kind of in the pandemic in particular, where a lot of moms had to leave the workforce to come home, take care of the household. And she feels like they need to get compensated for that opportunity cost. And so she's fighting now for equality, um, and for paid equity for moms. That's called the Marshall Plan for moms. And so, anyway, that's her, I think. For me, I'm just kind of providing air cover, like retweeting, retweeting her articles
Okay, but were you an activist type before you got married, or was that was it already in your DNA and that's how you guys paired up, or was it something that she brought to the table and you acclimated?
Yeah, I think I was always like a marketer, a promoter, and also kind of like, realizing what good causes are and trying to amplify them.
Mhm.
Um, but I don't think, well, it's interesting actually. My wife and I met at a Barack Obama fundraiser.
That's what I'm
She
saying, right?
in 2008, she was throwing the fundraiser for the president, and I was DJing the fundraiser. And actually, like literally, that's how we met. And it's funny because President Obama will say like he introduced us. I mean, in a way, he did, And so, but I think I became a lot more active, after meeting her, for sure. I don't think I was taking on causes, um, certainly, by myself before. So I think she definitely brought me into that world. You know, and our kids too. I mean, I remember we brought Sean when he was, you know, 2 years old, maybe, uh, to the Women's March. You know, like like millions of people in, you know, on Independence Mall, like suffocating. I was like carrying this little boy with like a pink hat. I had a pink
Mm.
hat. I was like, this is awesome, But yeah, I would definitely not have been there had our wife not inspired us.
Right.
So,
Okay.
yeah.
But you're doing stuff now. You want to tell us a little bit about the 100K pledge?
Yeah, sure. So this was last summer, actually, after George Floyd. Uh, Actually, two other college buddies uh, and I got together and said, listen, there's a lot of people making pledges, and we've seen this kind of all the way back to Rodney King and Trayvon Martin, and a lot of it, unfortunately, ends up being like lip service. Like people give pledges, they say things, and it's a blip, and kind of we forget about it, especially with these types of media cycles these days. Um, and so we wanted to kind of keep people honest and accountable with these pledges. And so anytime somebody made a public pledge, we would record it and we put it on this website, the 100K pledge. Um, and we also wanted to facilitate people to create their own pledges, essentially for, the economic empowerment of the Black community. And you can go to the website now, the100kpledge.com, and create a pledge and pledge to, invest, pledge to donate in Black communities. You can specify what you want to do or keep it broad. And it's essentially, $100,000 that you will pledge over the next 10 years. And we will track it. And you can actually see we just rolled out a progress tracker. Um, there's very large corporations that pledge billions of dollars. I think we're tracking close to 40 billion now. And we put them on there. And, their PR teams are reaching out to us like, take us off, take us off. We're like, no, tell us what you've done. Like, tell us, like, of this,
Right.
like 2 billion that you pledged, like, send us updates so we can update your tracker. Cause this is like a public, essentially, my co-founder in this, my buddy VJ, calls it like the Fitbit for justice. It's a public, or maybe
Okay.
the Whoop for justice is probably a better analogy now. Where everybody can see it. It's completely transparent. And I think that, that's what we were frustrated about, is all these pledges, all this lip service that was being created, and there's no accountability behind it. So yeah, this
Hmm.
website's up. We paid for the domain for 10 years. We paid for Google Cloud for 10 years. Like, it's here. We're going to update every pledge as it comes through. And, we're not going to call people out, but the public can see like who's living up to their promises and who isn't. So, that was a very simple kind of digital site. We built it in a weekend. We pushed it out, that we thought could really move the needle, post George Floyd. And a lot of people think that it has. Another example also after the pandemic hit was we launched the site also in just 48 hours, called helpmainstreet.com. We realized a lot of our favorite restaurants, were getting crushed. And the best kind of way to help them, after some research that we did, was kind of a no interest loan, which was essentially buying gift cards from the restaurant, right? So the money goes straight into the bank accounts of the restaurateurs and the owners of those establishments. And so there is no gift card aggregator online. Gift cards are incredibly fragmented. You have some with Square, you have some with 20 other providers. And so we just aggregated them all and put them on a website. And we're still able to help folks find their favorite restaurant and have them buy gift cards every day. And we ended up doing that with this great company in New York called Lunchbox. But yeah, that was something, again, that we just saw that there was a need for, and executed pretty quickly. And also bought that domain for 10 years and Google Cloud for 10 years. So these are kind of like timeless, projects that, small kind of effort, great ROI, in terms of something you can create, produce, and get out to the world, and, get a few reporters talking about it, and, the traffic starts coming.
It sounds like high level, look, you've accomplished a lot. You built a great fund. You're having some social impact. You've got your family going. Where do you see yourself heading in the next 10 years? Where does this go?
Yeah, it's a good time to announce that we're retiring. I think there's a lot of VCs that you heard in the last week that hanging up their jersey. We're getting out of the game. We're getting old. We can't really see. Hard to read emails. That's it.
You're being sarcastic. I think you are.
hanging up our laptops. No, listen, we're having the time of our lives right now. I feel like we're just getting into it. 10 years from now, I want to be doing the same thing.
Yeah, more of the same.
Yeah, 20 years from now, more of the same as well. I mean, I think we want Eniac to outlive us. I think we've got, a bunch more funds before we start thinking about that. The world has changed, post COVID, and also with Web3. As exciting as it was to invest in mobile 10 years ago, it is to invest in crypto and climate and Gen Z today. More exciting probably today. So more of the same. If we can continue to help founders realize their purpose, and if we can have, some sort of impact on the world, and doing it, through, our values and our mission on other projects. And by the way, where they merge, even better. We're investing in a lot of companies that are also incredibly mission driven, or have incredible values. And so that, that's the ultimate kind of holy grail when all your worlds converge. But yeah, listen, continue doing good, and helping people, realize their potential.
I'll leave off here with one last question. You've had a lot of experience on both sides of this game as operator and investor. What's one lesson that maybe people don't hear every day that's not cliche, that you wish more entrepreneurs knew that would be helpful to folks?
Yeah, good question. Listen, my first startup went bankrupt. And at the time it was a completely humbling and humiliating experience. Being, son of an Indian immigrant, at the Diwali parties, those aunties in the corner were like, that kid filed for bankruptcy, and it was embarrassing. And, it took me a while to bounce back from that experience. Looking back, that was the best experience of my life, because I think when you face failure and come out of it, you just come out of it with this incredible invincibility and resilience, where everything is upside. like literally the worst thing that could happen to you in business already happened. And I'm not afraid of that anymore. Like I took the fear off the table. And so let's go. And so I think the advice would be, fail fast. Do something that you're afraid of doing and fail at it. And get back up. It'll take you some time. Shake it off. It'll take you some time. Get back out there. Your body, your subconscious, your muscles have muscle memory. You'll avoid the same mistakes. And you'll do a lot bigger and better the next time around. So fail fast. But putting my ENIAC hat on, fail fast, not on our dime. Fail fast. Fail fast
Someone
early in
else's
your career
money.
with somebody else's money. And then the next go around, we'll back you.
That's awesome. Thank you for being on today.
Thanks for having me, man. It's great to see you.
As always, it's great catching up in the hall. If you liked what you heard, please hook us up with a like or a 5-star review, and feel free to share with a friend. You can find me on Twitter @MPD, and to hear more of my conversations with innovators, subscribe on YouTube, Facebook, or any major podcast platform. Just search for Innovation with Mark Peter Davis.